Hey everyone, Dalton Grados with Grados Capital here. Now last week I made a video talking about the technical analysis of the S&P 500, and in that video I promised that I would make another video about the actual US economy, because if you have been following these markets, then you will know very well by now that the stock market is completely detached from the actual economy. And so for those of you who are more interested in fundamental analysis, I'm going to talk a little bit about the US economy. Are we really recovering? You know, we hear this, you turn into Fox and CNBC and you read these articles on these finance articles that come out. You hear this narrative about the booming economy. Oh, we are just booming right back to business, you know, V-shaped recovery since the pandemic. Now, the stock market has certainly done a V-shaped recovery, but what about the economy, the real working people and that make the world the way it is? What does that look like? Now, this video can go on for hours and you can talk about a number of different factors, but in the interest of making this short, simple, and sweet, I'd just like to turn your attention to three things. Number one being money velocities. Now, money velocity is widely regarded as one of the biggest indicators to the health of an economy. And what money velocity is just essentially the movement of money through the economy. In other words, how often money is changing hands. So in a healthy economy, I would go make money at my job, and then I would go take that money and spend it at the restaurant, and then the owner of the restaurant would take that money and go spend it on clothes, and then the seller of those clothes would take that money. You get the idea. So I'm going to take you to a chart here, and this is just a government website from the St. Louis Fed, and this is the chart of the money velocity. Well, look at it. Okay, let's zoom in a little bit here. So we're from 1980s to 2020. Obviously, huge drop here in Q2 of 2020. Small uptick and kind of leveling out here. Of course, this is, you know, of a broader scale of several decades, but you tell me, does this match what the news is telling you? Okay, and the second thing I'd like us to take a look at is the US trade deficit. You hear this word trade deficit bounced around all the time when politicians are running. What is the trade deficit? Well, very simply, our rate of imports to exports. In a booming economy, we would be making things here in America and exporting it to other nations, and we certainly do, but we are currently in a trade deficit, meaning we import from other nations more than we export. In other words, we are consuming much more than we are producing. Here is a chart of that from census.gov. Again, this is just data. Take a look at it over here. The total deficit is 74.4 billion, and that's just comes from the imports minus the exports. And then of course you have your lovely chart over here from March 2019 to now. This ends in March 2021. Look at the rise in this from 50 billion down here. This was the pandemic time, and then now rising to 75 billion. That's a 50% increase. Now, that's not the kind of increase we want. That's a 50% increase in our deficit. And finally, the last thing I'd like us to look at is, of course, the US dollar. Now, here is a chart going from 2019 to now here in 2021. You can see the US dollar is devaluing. So as the government continues to stimulate the economy via money printing, they are simultaneously taking away our purchasing power. In other words, the value of what a dollar can get us. And so that nice stimulus check you got, well, it wasn't really free. You paid for it through your purchasing power. And now we have an administration that, of course, wants to add taxes on top of that. So they are giving you money with one hand and then taking it away with the other. And so in summary, when it comes to the health of the US economy, we've considered three things: the money velocity, the trade deficit, and the strength of the US dollar. Tell me in the comments below what you think. Are there other things to consider? If the United States were a stock, would you go long? Would you buy into that stock? Or would you rather place your bets in places like China and India and other places in Asia that are rapidly expanding? They control a lot of resources and they're actually producing as a nation. So let me know in the comments below what you think of this data. Now I want to end here with just an individual note of what does this mean for us as individuals, for the young, hungry entrepreneurs. Well, I think, and I've said this before on this channel, I think people like us that are in this game, that are understanding the financial game, that are not holding US dollars, but we're investing in hard assets that are growing in value, and we're multiplying our income through trading and investing. We are the ones that are going to propel ahead of this and come out on the other side in the upper wealth class. The people that are going to get hit the most, and I've said this before, are the people, which is the vast majority of the population, who doesn't understand this game. They've never been educated on finance. That's what one of my passions here for making this YouTube channel is, to provide free education and resources. But the vast majority of people, they don't know this game. They don't even know the rules. They don't know the game that they're in. And they're just kind of used to this old adage of the generations before us that could just work a solid job and provide for their whole family and then have extra and then have a pension. And those days are gone, and it's only going to get worse for those people. And so that's what I'm all about here, is financial freedom, creating independent wealth. That's the goal we are all going to. And if you are for that, if you like that, then give this video a thumbs up, subscribe to the channel, and also follow Grados Capital on Instagram, and I'll see you guys next time.